All right, so Chris, we've been spending a lot of time recently discussing the market, its uncertainty, how to stay relevant. Can you tell us a little bit about why it's so important that we have these conversations and why we need to be in the middle of these conversations as real estate agents?
Sure. I think right now what we see is a lot of uncertainty in the market, especially if you pay attention to the media, right? And I'm talking about specifically the real estate market. There's stock markets and crypto markets and all the kinds of markets, but I'm talking specifically about the real estate market. And if you follow the headlines associated with real estate, you might think the bottom's going to be dropping out of real estate. I find that it is important during times of uncertainty to read the world, read the situation, read the circumstance, and figure out where are we really? Because you can't always rely on news and publications to be able to share what's going on because of course they have agendas, they have clicks that they need to make and advertising that they need to sell. And so I think oftentimes we have the best way to figure out what's going on is to talk to other professionals in your space, maybe in a different area or maybe even in the same area, to develop some kind of consensus. And so that's why it's so important to be on the street figuring out what's going on, and I think we can all help each other by doing it.
Yeah, awesome. And so, with that, we wanted to hear from you all and how you're feeling about real estate right now. So, we invited marketing club members Mary Anglin and Troy Schlicker to come on and chat with us. Troy, Mary, thank you guys so much for being here and taking the time to share your experience and share a little bit about what's going on in your markets. Before we begin, can you tell us a little bit about why you got into real estate, how long you've been into real estate, and just any background information about yourselves you'd like to share?
Yeah, don't forget, tell us where you sell real estate.
Yes, that's a huge one too. Where you sell real estate at?
Sure, I'll go first. So Troy Schlicker, I'm based out of Austin, Texas. I've been a real estate agent and broker now for about 8 years, have my own boutique brokerage. Prior to getting my real estate license, I was actually in the mortgage space, which has been super beneficial as a real estate agent as well. And that's what led me into the real estate side of things, like the additional flexibility that being a real estate agent provided over some of the constraints you have in the mortgage world. And so I've always really liked finance and kind of the analytical side of both real estate and mortgage. And so that I found that it's been a really beneficial thing for me and with my clients.
Nice. All
So,
right.
Mary Anglin, and I live and work just east of Los Angeles in the San Gabriel Valley. And I've been in real estate 8 years. Honestly, I came because I wanted to be my own boss. And I had been in several different businesses where they had lost their funding or closed down or downsized. And I just didn't want to have to go through that anymore.
Yeah, that's the great thing about getting into real estate is you trade in one boss to have lots of bosses, right? Every client and prospect becomes your boss,
That's true.
but in a good way, in a good way.
And you can say no to the bosses if you need to.
Yes. Yeah. You can always say no, thank you. You can always say your real estate client, let me introduce you to my competition. Mary, you sell real estate in West Covina, which is east of Los Angeles. Can you tell us a little bit about what's going on in your market? What are the challenges that you're facing? What are you seeing?
Okay. I work West Covina, but it's a city within the San Gabriel Valley. And I work throughout the valley. So my area is pretty broad. But what I'm seeing is that the market seemed like it changed almost overnight, especially for people who weren't paying attention. Probably I should say agents who weren't paying attention. One of the cities that I work in where I've got a listing right now, the first 3 months of the year, the average days on market was 9. In April, the average days on the market was 36. And by May, average days on market is 56.
That's a big change.
And we're seeing a lot of listings that are dropping their prices.
Gotcha. So you're seeing now, is there still the same amount of inventory on the market, or are you seeing an increase in inventory, or is it still pretty much the same?
We are seeing a little bit of an increase in inventory. And we're not seeing the same buyers that are flooding into our listings and all of the competitive offers that we were getting. Instead of getting 28 offers over a weekend, we might be getting actually none since the days on market is stretching out, but we're getting maybe 3 or 4 offers instead of 10 times that.
Gotcha. Would you, if you had to go back in history, I know you can't pinpoint a time, but let's say just to make the math a little bit easier, do you see the market, is it similar to pre-pandemic, like in 2018, 2019, or is it even lower or different than
Um,
pre-pandemic real estate?
I would compare the market more to 2015, 2016.
Why is that?
I would say it's similar to 2015 or 16 because there was not so much competition. You could get buyers into a home much more easily, and the homes are staying on the market longer. So you didn't, once you saw now or in the past year or two, once a home hit the market, you had to run there immediately and get an offer in immediately. You don't have to do that anymore unless it's a super fantastic house that's
Right. Unless
priced
it's
below market.
priced and yeah, highly
Yeah.
coveted. It seems like it's been what, about a year and a half? It feels like forever, but a year and a half, almost 2 years where we've had this elevated real estate activity since 2020. It's almost hard to remember what life was like 3, 4, 5 years ago. You know what I mean? Like in terms of what real estate felt like at that time. So it's really interesting to look at it. We've gotten used to this elevated activity. And gosh, anyone who's gotten involved in real estate in the last 2 years might have thought, gosh, is this how it's supposed to be? Is this the way it always is? Whereas many of us who've been in real estate for a while see this getting back to somewhat more normalized markets. Troy, what about you? What are you seeing in your market?
Yeah, here in Austin, I would say things have shifted a little bit. Not that there's been a dramatic change. We've just gone from the absolutely crazy sellers market that we had seen the previous 18 months, like you mentioned, from 2020 to a strong sellers market. So now instead of homes having 10 plus, maybe even 20 plus offers in that first weekend, if it's in a good neighborhood and it's priced right, it may only have 2 or 3 offers and go for it at about list price or slightly over. We do see a few more homes that are sitting on the market, also partially because home prices aren't necessarily rising 2 to 5% every month. So someone who thinks that, oh, 3 months ago, the home in my neighborhood sold for this, so mine's automatically going for 5 or 10% more. That's not necessarily the case. It's not that the home prices have dropped. They're just leveling out in that regard, which is a healthy thing for the market. The last 18 months have not been a super healthy thing for a lot of buyers and sellers. And we're getting more to, I would say, that pre-pandemic level here in Austin of it being still a strong seller's market. But both buyers and sellers are having to readjust their expectations because sellers can't just ask for any number they want. And buyers have to understand that we're not in a market that are going to see home prices drop. You still have to be moving quickly, but you're not going to have to be as quick and offer ridiculously over list price like you were potentially 6 months.
Interesting. Mary, I heard you say that in your market, you don't think that agents or really clients in general have been paying attention. Do you still feel that way with the decreasing in home prices? Do you think that these buyers that were scared off earlier in the year during the pandemic maybe aren't paying attention and they don't know that it's becoming more normal than it has been these past 2 years? Do you think that's an agent's job to let the buyers in the area know, hey, you guys, you've been waiting for this? It's time to start putting those offers in and time to start looking for those homes again.
Yeah, definitely. And I think agents need to constantly be educated, educate themselves. And I don't just mean educate on the newest marketing strategy, but to educate what things mean. What is a recession and how does it affect the market? And agents need to know their local stats. They need to see what's going on and be able to convey it to their clients, to their buyers. And one thing in our area, there are a lot of investors. So what I've seen is maybe the agents representing those investors are touting it a little bit too strongly because investors have always lowballed, but now they're super lowballing. So we're not in a buyer's market and they're asking for a low price, but then they're wanting termite remediation and they're wanting home warranties and they're wanting repairs. And I just tell the agents that are representing those buyers, we're not in a buyer's market. And so your offer needs to be more attractive.
Think,
Interesting.
what you said earlier about being educated and being able to explain to clients, right? To buyers, to sellers, prospective sellers, not just what the data is in the local market, but what it means for them. I think that interpretation is so important to getting recognized as a real estate professional. And it's also like the mark and distinction of a professional being able to relay, here's what is, like, these are facts. I'm not going to dispute what the days on market is. I'm not going to dispute what the list to sales price ratio is. Like, that is what it is. But here's what it means for you, Mrs. Seller. Here's what it means for you, Mr. Buyer. Here's what it means for you as owners. And then being able to lay that out and let them make an informed decision, because that's what professionals do, like doctors, where the doctors are going to say, here's what my recommended plan is, and this is what we're going to do. Same thing. The client ultimately has to make their individual choices based on how we've informed them. But I think that skill set of being able to interpret the market is one that oftentimes goes undervalued until there's a market shift or until there's a market change, if that makes sense.
Yeah, that's for sure.
Cool.
There's a talk of recession, which both of you slightly mentioned a little bit when you talked about what's going on in your markets. And there is a shifting market in real estate. So, Troy, can you start off by telling us how that's showing up exactly in your market? Maybe you can go into a little more detail, and then let us know what you're doing about it within your own real estate business.
It's interesting because recessions are always a lagging indicator. It's what happened technically a few months ago. So there's a lot of people who strongly believe that we're in a recession or going to be in a recession, which is just 2 consecutive quarters of negative GDP. And it's important to look not only at short-term history, but longer-term history as well. In long-term history, we've had a lot of recessions during the time that there's housing statistics out there. Going through a recession doesn't in and of itself mean that we're going to have a huge decrease in home prices. And I think a lot of people get recency bias of generally the most recent recession that people really remember is '06 through '08, where we had the housing crisis. And so their assumption is, shoot, if we have another prolonged recession, that means home prices are coming down 20%. And that's just not historically accurate. Another thing that people, I think, are looking at is the rising interest rates and not realizing again historically that a 5% interest rate is historically a very good interest rate. And so you have to be able to take these things in long-term context to see what might be ahead for the future. Now, none of us have crystal balls. If we did, we all would have bought homes in March of 2020 and we would all be retired, but that's not the case. And so we have to take a look at that. And then that's where, again, both your local real estate market, but also your specific client situation is super important. If you have a client that in Austin, we get a ton of people relocating, some of them from Mary's area out there in East Los Angeles, Orange County. And so if we have those people that are moving here and they plan to live in Austin for an extended period of time, it's likely still a really good time to buy because home prices are not going down and interest rates look like they might only be going up over at least the short term. And so really understanding what the objective is of your client and what is happening in your local real estate market is very important, because there are some markets that will get hit harder than Austin. And there are some clients that it might not make a whole lot of sense to buy right now. If you live here in Austin or anywhere and you don't have a specific reason to move within your own city, why would you get rid of a home that you maybe bought a couple years ago that has a 3% interest rate just to move into a home in the same neighborhood at a 6% interest rate? Unless that other home provides some additional value. It is bigger because your family's growing. It's smaller because you're downsizing. It provides a better view, better schools. Unless there's a specific reason, it doesn't necessarily make sense to make a move. So understanding those specific things are critical in being a trusted real estate agent for your client.
It's funny. As you're explaining that, Troy, it makes me think of how important it is, or reminds me how important it is that we prioritize our client interests first. It's easy to get caught up in stuff with the market, whether it's fast, whether it's slow, whether the homes are flying off the shelf or if they're sitting there for a while. Ultimately, it's every client needs our attention. Every client we have a fiduciary responsibility to take care of. And it may mean that, sorry, now's not a good time. Based on your situation, I wouldn't do it. You ultimately make the choice. And I've informed you to make a good decision, but we have to be able to place their interests first, which is, I know what you guys do, but I think sometimes people might forget that because they get caught up in following headlines. You might start to get fearful and concerned about what could potentially be ahead. And that's the problem is when we get scared and when we're fearful, we might compromise some of those concerns, or we may not focus and prioritize on what's really in the best interest instead of just trying to shove them into a house. It might have felt like that because for a while, buyers, it was hard to find homes for many of them. You'd have to put in offers and they get rejected and put in offers. That prior market set us up for, let's get them in there. Whereas now it might be time to pause and say, let's assess what you're trying to accomplish. Let's look at what your real motivation for buying or for selling. Let's really understand what you're trying to achieve so that we can help you establish the appropriate timeline. Make sure that we're buying this property right and not just buying it because we feel the FOMO pressure or the fear of missing out. And so that's a really important point for all of us to remember is that when we place our clients' interests first, and I like to think of it as being the voice of reason. You mentioned trusted advisor. I think in a market like this, we need to be voices of reason so that our clients aren't swayed by the headlines, but can make informed decisions based on what's likely to be the best outcome for them.
And on that point too, like even advising if the right decision really would be for someone to buy a home, but because of the fear of a recession or the fear of home prices dropping is going to make them stress out so much that it's better mentally
Mm.
and in just a personal space for them to hold off, even though it might mean in a year from now when they buy, they have to buy at a higher price. They have to pay a little bit higher interest rate. The peace of mind of not making a wrong decision for some people might be the right thing for them. As someone who's very analytical, just because it's the right mathematical or financial kind of best decision that way, doesn't mean that it's the right decision for that person if it's going to cause them a lot of additional stress and anxiety. Always stressful when you buy or sell a home because most people don't do it very many times in their life and it's a huge purchase. But if it reaches that next level, it just may be something that's worth holding off.
Yeah, peace of mind is a big deal in purchasing a home or selling a home. Just having peace of mind and not thinking you made a mistake or having regret or feeling like you overpaid, all that stuff. And you don't want to be connected or associated with a bad experience because you're nudging them along. That makes a lot of sense.
Yeah. Mary, what about you? How are you handling this talk of a recession and these shifting markets? I know you just talked a lot about also having that market knowledge. What other strategies are you employing to handle this shifting real estate market?
The knowledge and the communication. You need to let your clients know from the get go that what we saw a year ago or 6 months ago or 3 months ago is not what they should expect now. But in regards to the recession, technically we are in a recession because, as Troy mentioned, it's defined by 2 quarters in a row where there's an economic decline. But we also know that a recession does not mean the market will crash. What I see is a lot of people freaking out because of unrealistic expectations, and then they're attributing their unrealistic expectations to a recession. So, to elaborate, buyers have an unrealistic expectation of a mortgage rate. 2 and 3% is not realistic. 5% is still good. Anything else we're dealing with in the economy is higher. So that's the buyer's unrealistic expectation. Sellers have an unrealistic expectation of pricing. They're still thinking that they're going to get offers that are 5, 10, or even 30% above list price. And when that's not happening, they're freaking out. And they're wondering, why can't we list it higher? But their expectation of price is really unrealistic. And then when we go to agents, expectation of days on market is not realistic. So to expect that we're going to have a contract that we've accepted within 2, 3, or 4 days, that's not realistic. So we need to get our thinking and understanding in line with what's normal. And I don't see the market as crashing, but I do see it as calming down.
That setting expectations is critical to producing the positive client outcome, right? For a client to have a
Right.
5-star experience, they have to have their expectations met. And so much of it is us setting the expectations to start with. What are some of the ways that you are currently setting expectations with your prospective clients?
It's all in communication. And of course, we always have the stats. But if we understand the reality of not beyond the stats, but what's happening, what we can expect, I think we have to be honest with them from the beginning. And sometimes I think agents are afraid to be honest because they're afraid they won't get the deal. So to be honest upfront, to be very clear communication from the beginning is crucial.
I see that a lot. I've observed in the 20 some years that I've been involved with real estate that sometimes we may not be clear as agents. We may not be clear about expectations because we don't want to disappoint our client or feel like we're letting them down because they might have these expectations. And for us to reset them might be disappointing them. Or to your point, we are fearful that we might lose that opportunity because it's not lining up with their expectations. And so I think that this is where, as real estate professionals, the better educators we can become, which seems like a weird thing to say because I know it's a real estate. I'm not a teacher, but some of the best strategies, not only to set expectations, but to get the clients what they want, is to educate and teach them and help fill in their gaps of knowledge, which means we have to get effective at communication. We have to get good at educating and informing. And it's a constant, and on every interaction that we have with a client, potentially could be an opportunity to inform them or to set or reset an expectation. Let's say we write our first offer on, right? And it gets rejected. And we even told them beforehand, hey, there's a really good chance that we're going to write this offer and we're not going to get this because of what the amount is that we're writing it for. And I would actually suggest we go higher, but we're going to write it in as what you said. And at that point, if the offer is rejected, now we get to reset expectations. We wouldn't say, see, I told you, but we would say, hey, now, if we're really serious about getting this property, perhaps we could write in at this amount. Or as we look at other ones, because they accepted somebody else's offer, we got to make sure that we're coming up with a strong offer. It doesn't have to be overpriced, just needs to be a strong offer. So that's really an important thing, I think, to take away from that is just making sure that have the mindset of constantly listening for where there might be gaps in expectations to reality, and then resetting them or informing and educating them. That takes work. That's active listening. You have to actively listen and observe the client interactions to see where are their expectations off the mark? Where are their expectations not connected to what the real market is or what reality is at that point?
So what I'm hearing from both Mary, Troy, and Chris is there's three crucial things that we need in order to communicate the shifting market. The first is market knowledge. You have to understand what's going on not only in your market, but in the surrounding areas or in the markets that a lot of these potential buyers are coming from. You also need to understand your client objections. This is crucial in setting those expectations and making sure that they understand exactly what could happen in this current situation, in this current market.